Okay, good morning everyone and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, May 24th. Michael Boutros here with you this morning. Pete, Sandy, Wael, Kelly, Karthik. Great to be here with you guys this morning. So, hey D, good to see you. On the menu for today, I kind of ran dry yesterday with any new fresh setups except the ones that we've been following on the majors. So I thought we'd take a deep, in-depth look at the commodity block. There's been a lot of interest in the room on those. So we will take a look at the DXY, an update on Aussie dollar, gold, silver, and crude. We'll take a look at the previous update, obviously, for dollar yen, which stretched into resistance. Euro Kiwi, Euro Oz, Sterling Oz, all still beautiful. Euro Oz still holding that range, so we haven't made a break yet. Sterling Oz coming off of support. We nailed it yet last night, or rather yesterday, right in the webinar. It was coming right into that key support. You saw a rebound off it, but still unchanged. I see Sandy's always in it. Says, as always, Sterling Oz. I got out yesterday short and opened today, re-enter at London Open. Nice, Sandy. Yeah, I was about to say, still looks good. So we'll take a look at Sterling Oz for sure. And then we'll go into the previous update, which covered all the majors. So Euro dollar, Kiwi dollar, dollar CAD. Obviously on the menu, you got the BOC on tap at 10 o'clock Eastern here in New York, as well as crude inventory. So it should be an interesting point for both the crude trade and dollar CAD at 10 a.m. As far as event risk is concerned, we do have Draghi, who will be starting some commentary here at 8:45. I'll try to keep you updated, but I'm not really expecting much from him. Okay, and that's what's on my list. Also, there's an interesting play on dollar peso. I'll be writing a piece on that for Daily FX today. I thought I'd give you a look at it. I'm not really looking to trade it per se, but it's out of support. It's been sitting at the low day close for the year for the last couple of days. It's continuing to sit at that right now. If we have time, we'll take a look at dollar peso. So anything else that I haven't covered, if you'd like to throw on the message board, feel free to. All right, let's jump right in. Here's what dollar index looks like. Start off the session. Here's what it looked like yesterday. I didn't really want to stress anything new here, except that the weekly opening range is basically intact. Okay, you made a nice Monday, Tuesday stretch. You tested the highs. You tested the lows. Like I said in the update, we're still sort of in no man's land here, but the levels remain unchanged. Okay, 97.87 being sort of the top side range of resistance that you want to respect. Still at risk for another drop lower as long as we're below this. The support that we were looking for that we didn't quite get is still 96.47, and that's the 618 retracement, slope support of the same downtrend off the highs for the year. Okay, so that would be sort of a sweet spot there for some support on the dollar index. So unchanged on that. Here's what the intraday charts looked like yesterday. Again, here's your weekly open. Sunday high, you made a low, you came back and tested the high. Really nice weekly opening range just below resistance. So if the weekly opening range, by the way, breaks to the upside, not really looking to play it, right? I'm looking to see if we get exhaustion into this region. If this gives out, that changes the near-term prospect for the dollar index and suggests you could see a much larger recovery before it starts to move lower. Now, it's important to recognize that risk because we are heading into the FOMC. As I said, as far as the FOMC is concerned today, guys, look, we got a little bit more of a hawkish tilt for sure to the commentary. The dollar sold off, right? It's interesting because the Fed is just following the markets. And then all of a sudden we get some data and all of a sudden everyone's like, well, we don't maybe need to hike as fast. So, I mean, this is the minutes from the last FOMC minute policy decision. Remember that markets are essentially priced in 100% that we're going to see an interest rate hike in June, just next month. So whether this commentary really has enough merit to shake the markets is going to be determined by how aggressive it is. And I really don't think we'll get anything too aggressive. But, and that's a capital but, if we break 97.87 on a close basis on the data after the release, you know, again, that would suggest to me that we do have a larger recovery at hand here. That being said, still looking lower sub 97.87. Key support 96.46. Questions on the index? That's number one. Okay, quick update on Aussie dollar. Oh, and here's what the live chart looks like, again, for reference. Really clean weekly opening range. Here's 60. Doesn't get much cleaner than that. Okay, immediate support is right at the weekly open, right here. And you have a slope line there too. So that puts you 97.16. A quick update on Aussie dollar. Looks like this. Here's what it looked like last night. Still pretty clean. Okay, so we were talking about it. Sandy, you in the room? We were talking about it, and for the guys who were trading Aussie with me yesterday, the pop fizzled out pretty quick. Okay, ended up being a false break on the session, and that was 7,500. So if you remember, we were talking about 74.90 into 7,500. You had a 38.2 retracement. You had the upper parallel. As we were talking in the webinar, it looked like it was making a topside break, and that kept you constructive. There's no way around it. This is why we use stops, guys. There's never going to be a scenario where you're going to get, unless you're chipping away at a winning position already, of where you're going to be able to recognize a peak like this. So as soon as it recovered back below 74.90, that 75 threshold again, that's when you know things are in trouble. Because like I always said, like I always tell you, when we see these breaks, we don't want to see price action meander. This is a big slope line that's been holding for months, right? Here's the April open. Here's the May open. So on a break like that, I don't want to see any dilly-dallying. I want to see the market really assert itself. You didn't get it, and a quick recovery back below 7,500 really was the onset of the pullback. Support, we noted last night, 74.40. The low was just shy. The low came in at 74.43 before making a rebound. So we're still holding this beautiful near-term ascending channel formation within the confines of the broader downtrend. So it hasn't happened yet. We don't have a decision in Aussie yet. Okay, we'll take a look at Kiwi, which is in a different scenario right now. But Aussie is still on a hairline here. This week still, I would assume Aussie is bullish. Sandy's asking. I mean, we're at the prefaces. The range in focus right now is 74.40 into 7,500. Same thing I told you last night. That's the major play. 74.40. If you guys remember, I dimmed it earlier in the week because I was saying I'm not really sure I really want to stress that anymore, the 618 extension off the highs, even though it was a really beautiful swing low back here. So it ended up being a pretty nice region. The weekly open was there and was rejected. So technically, you can't get bearish yet. Yeah, Sandy. I would still assume you're still in the near-term uptrend. It's just that the near-term uptrend is approaching the broader downtrend resistance. So this pop here, the resolution of this range should be a pretty well-defined break in either direction. I'm assuming that we'll see a topside move, but you're coming up on FOMC, and if the dollar pops, it still might be a recovery lower before we move to new highs. So we have to make that assumption, Sandy. We have to leave that risk, rather. Let's look at the live charts. So again, here's what the daily chart looks like. Obviously, we have to see what today's candle looks like at the close, but you couldn't get that close above 74.90 yesterday. Look to the left. It's also defined by the swing lows that you made back in March, pretty nice pivot lows that you made back here in April, and again, on that confluence region that we have to watch out. If we stretch higher, which is what we would have wanted to see here yesterday if this was a legit break, but if we stretch higher, 75.40 into 75.50, this region here, we talked about this for a while too. I don't want to beat a dead horse. 200-day moving average, 100-day moving average, 50% retracement, all converge right in this 10 pip, 15 pip region. So the levels are pretty well defined. And a 74.40 break, the lows here from April, the lows that we made in overnight, basic trendline support, that would shift the focus right back into a correctionary play or even resumption, Sandy. So we need to be careful here. This is sort of a major key range I'm watching heading into the US Open today. Here's what the intraday chart looks like. Doesn't get much closer and doesn't get much cleaner than that. Okay, into support, rebound off support, 74.90, 7,500, still the major resistance that we need to respect on the immediate term. Questions? Pooja wants to take a look at Aussie Kiwi. Yes, let me jot that down. And Sandy would like sterling yen. GPY for Sandy. Gotcha. Okay. That was Aussie, number 2. It looks like Dee is at the airport and she's got a flight in 30 minutes and wants to go over the dollar crosses. Yes, let's take a segue for you. I will accommodate that, no problem. So guys, let's take a quick segue here to help her out. Here's Euro, okay? Number 3, I guess we'll make this. Nothing to really update as far as, anything fresh on Euro. Here's what it looked like earlier in the week. The major key resistance, 112.85, didn't get hit. We turned right ahead of the high day close, 112.56, which was a target that we cited on Sunday night. That's still the high, and that's still the opening range high that I'm respecting for the week. You saw the pullback here, right back into initial support, 111.90. Guys, the levels are like ping pong, and on this trade, everything still is unchanged from the Sunday update. That's why I haven't really been just putting a new chart every day. It's just the same levels. We've been talking about the fact that there's, in my humble opinion, there's still big risk for exhaustion on the pullback, which is what I'd rather be playing. I can't really assert or advocate any new fresh long exposure at this point. But at the same time, I don't want to encourage you guys to aggressively start fighting this yet. But that being said, it's got the hallmarks of exhaustion near term. We've been talking about that. So the divergence that you saw into the highs, the pullback here, we're sitting right at the weekly open. So we're unchanged exactly on the week as it stands right now, heading into the FOMC minutes later today. Again, I'd rather be looking for a support bounce off of 111.28. That's a key level. And on a break of that is where you can really, I think, feel comfortable on a larger pullback towards 110.20, maybe towards slope support 110.50, this region here. But, as it stands right now, it's tough. I'm taking a more neutral stance, quote unquote. But if you put a gun to my head, I still think you get a deeper pullback here towards that 111.29 level. You didn't quite post an outside day reversal yesterday, but it was a pretty convincing reversal bar, in my humble opinion. Okay, so that's euro dollar from earlier in the week. Again, no change to any of the levels that we're looking at. Same thing. That should coincide with resistance on DXY. So that would coincide with a nice rebound off support in the DXY. Right, Wael? This is basically the inverse chart of DXY. DXY is 60% comprised of the euro dollar. So you can see a scenario where maybe the dollar takes one last dip, right, into that support structure that we were talking about, into here. That would give, the euro dollar one last leg higher, possibly another check of the high day close, or even maybe get a check of 112.85, the level that we were looking for early in the week that we never got, and then a reversal. I don't know. But certainly in my mind, the risk still remains for a near-term exhaustion trade here on the euro. Just from the momentum signature, from what near-term price action is doing, it's still constructive. It would be just, in my mind, corrective near-term. Wael, does that make sense? Welcome to the room, by the way. Good to see you. So he was taking, okay, I thought you were talking about a buy in the euro dollar at 128, which is resistance 97.87. So 97.87 is resistance on the dollar index. You want to think of them as inverse, right? So the euro on a pullback, yeah, that's the first area of support I would look for. And one other thing, it doesn't exist now, but if you get the extension, 2 equal legs down, if it settles somewhere in that area, it would also be a beautiful area to find a rebound. So for our purposes here, we're real near term, okay? So I'm thinking, what's the next immediate move? What's the next immediate risk? We're not talking about swings. Even if I was going to take a long here, I wouldn't be targeting anything above 1285 per se. We're talking about, we do this webinar every morning. So tomorrow it might be that we're looking for the break and a sell against that region, right? But the immediate risk, I think, is still something that we want to look for as far as a possible break or a pull lower here in the euro first before resumption. We're obviously still in the broad context of this uptrend. Does that make sense? He says, got it. Thanks. Right on. Just want to make sure we're on the same page. Okay, so that's euro dollar. Let's take another quick update on Kiwi dollar, number 4. This was also from the Sunday update. Here's what Kiwi looked like. And certainly we blasted through this major key resistance level, and a beauty it was. And these are the kind of, market moves that give you confidence, and these are the kind of market moves that at the same time have conviction behind them. As opposed to Euro, or Aussie rather, which broke that resistance range and quickly recovered. When Kiwi broke the key range that we were looking for, it just kept going, taking out targets at 70.30 and eventually stretching very, very close to that upper parallel. So here's what Kiwi looked like earlier in the week on the 240. Here's the 60-minute chart, really highlighting that key region to 69.70. Here's Kiwi dollar now. So we're looking to see if we can get that stretch near the upper parallel. 70.30 has already been taken out. You got the pullback yesterday. It didn't give us much. Still pretty constructive, but I'm worried about the momentum signature here. And then again, you're heading into U.S. event risk. If the dollar does find some legs, I'd be interested in possibly fading the next rally if we get one pop more higher towards that upper parallel. Remember that you have the 100-day moving average. You have the upper parallel for that broader structure. And again, on the momentum signature, now you're back below 70 again. So if you do get sort of emotional spike high, might be a decent play for those really near-term guys. Here's what the intraday chart looks like. Okay, let me just clean this up for you. At this point, the overnight lows are going to be significant as they converge right here on the parallel, both downslope support and the median line off the lows, which was perfect resistance. Break, saw acceleration, support right there at the lows, that's 69.88. Oops. Don't really need that anymore. That's null. That's null. Okay. Okay. So watch 70.75, 70.70, this region here. Okay, on the immediate stretch. It's really, I mean, the next major fib level, the high comes in at 70.90, 70.96. We're splitting hairs here, but this is the region. This is the region of resistance. Basically, look at the highs. That's all I got to say from March. I'm not really one who stresses highs crazily, if that's a word, but the convergence of all of this right here is pretty big. Both near-term upslope support, long-term downslope support, and Fibonacci and swing high relationships, all in this zone between 70.75 and basically the 71 handle. So a little bit higher in Kiwi if we can get the stretch. A break below 69.88 would sort of start to change things for a corrective stance lower heading into the FOMC, but the levels remain pretty beautiful. Any questions on Kiwi dollar? So we're basically up in these parts right now. Okay, looking for resistance near the upper parallel. And that is number 4. Number 5, we definitely want to give a quick cover before D leaves here for dollar CAD on the BOC, which is up on tap, as well as some of those oil inventories coming out at 10 o'clock. 135.10 into 135.30, I think it was the level to watch as far as major key support. And we opened the week right there. Once that broke, 34.10 into 34.55 was a big region. That was the 618 retracement. You had former swing highs, a nice pivot. We came right into the bottom, to the top rather, of that support zone. And then we just covered and we basically took it all back again. Here's what dollar CAD looks like. So round trip, it's basically the dollar index, same deal for the week. Here's your weekly open. You made a low right into support. You came right back to test the weekly opening range high. It held as resistance, and you're right in this range. So as far as dollar CAD is concerned, heading into the BOC, you're looking for a definitive break of this range. Don't mind the 50% anymore at this point. We don't want to be chasing fibs that haven't reacted to our levels. The 1618, we'll go ahead and drop that too, and just highlight the weekly opening range high. So these are the levels that we want to pay attention to at this point for dollar CAD heading, excuse me, heading into the BOC. Pretty well defined weekly opening range, 34.10, 34.41. Sorry about the levels, guys. That level is the break that you would need to see. It would be an objective break of the weekly opening range, a key break of a major pivot in price, former swing highs, and a key 618 Fibonacci relationship. So very objectively, you'd be looking for 33.41 on a soft target, more likely 32.80 on a deeper cut lower, if that gives out. I mean, that's how critical the nature of this is. And again, a break of an uptrend, a break of this ascending formation here rather, right? If this is legit, and this is just a break of support acting as resistance, we should hold and see this thing plow lower. If it kind of dilly-dallies and does one of these, I'm not going to consider this a break, A, and B, I'm going to stress this larger formation off the lows much less because the market has started to basically not respect that slope anymore or that gradient. So we'll have to reassess the scenario here. All things held constant, let's watch a break of this weekly opening range with the risk lower, still sub 35.75. As long as we hold those lows from last week, you want to be mindful of dollar CAD strength. Questions? Oil inventories at 10 o'clock, BOC at 10 o'clock. Keep your eyes peeled here for dollar CAD. Again, a quick reminder to anyone in the room, if you do want to take a snapshot, that camera button, top right-hand corner of your screen, go ahead and click on it. And you can keep these charts for reference later in the day if you'd like to. Okay, that's number 5. Anything else we didn't cover? Let's jump into dollar yen real quick. That's number 6, and we'll cover all the dollar crosses here. So here's what dollar yen looks like. We stretched and just turned ahead of that resistance we were talking about yesterday. So remember how we were talking about, look, it's basically off slope support. There's no reason to get bearish right into support, right? But the weekly opening range comes in just lower. So if it gives out below 110.80, cool. Let's just consider that a break. But at the same time, you know, if we get the recovery, this is the sweet spot. We didn't quite get there. I have pegged 112.19, which is actually the swing high that you made back here, March 30th, and it was a real nice pivot on the way up. Instant resistance break, saw acceleration, and then instant support. So that converged right on the upper parallels. You saw that we failed right basically ahead of it, you know, at this parallel, so I can't get too upset. Basic trendline resistance off the highs. You're never going to be perfect. Is that it, or do you get the last stretch? Let's see how the U.S. Open looks, but I'm looking for exhaustion here near term on this move. I think the 100 would take us a little bit higher. Let me just see this real quick. The 100 would take us 112.35 to here. So if this is just ABC, if it's just a simple correction, that's why I don't want to get too excited on trying to call an end to this rally, because objectively this is a break of the weekly opening range here, right? So if this is going to move, maybe it's got a little bit more legs You know, another 50, 60 pips to the upside might be a decent rally. A stretch maybe on the FOMC, an emotional reaction, maybe a dollar surge real quick into that resistance level would be kind of beautiful on a failure, again, to try to break above this trend line, and then maybe the move lower subsequent. But that's sort of a big region you'd want to watch near term. Just watch 112.35, 112.20. It's the same level that we were watching yesterday. I don't want to start choking up the targets because we're making new highs. That's objectively where the market has found some resistance. That's objectively where there's structural resistance. And that's where I'd start to look for a little bit more of a fade opportunity on the dollar yen rally. Questions on dollar yen? The abomination doing doing its thing, but not all that ugly actually. Levels are still pretty clean. Questions on dollar yen? That is number 6. Okay, I'm going to take a quick segue back to yesterday's update. We'll go over the commodity block, gold, silver, and crude. And then we'll go over the previous update on some of the other crosses which have continued to work out so well. Euro, Kiwi, again, that range in Euro Oz, which I'm still watching, and Pound Oz. So without further ado, here is gold. This will be number 7. And here's what it looked like last night. So the trade still remains constructive on the broader sense, but near term, if you guys remember, 1264 was a level that we had highlighted last week, okay? And it was a big region of resistance. We still haven't technically tagged that region, and the market has kind of turned from it both times. So here was the first tag on the 18th early. Came right into 1264. Again, that's the 618 retracement key of the entire decline. The pullback came right into the 200-day moving average, and we've been playing ping pong ever since, although on a contraction. So on this last advance, you didn't quite get into 1264. You turned right ahead of it. On the pullback, you turned right ahead of the lows. But near term, there is a nice upslope. And this parallel off the highs is what this is derived from. All these slopes, these are just basic trend lines derived from this upslope. So you could see, extending off the lows here, more or less, caught this rebound that we made for the weekly opening range low. Just lower is this region, which is sort of near term my big play, or a big support rather, let's call it. 1245, 1244.76 into 1245. That's the 100, so 2 equal legs, and a 38.2, and the swing lows from last week. So that's the break that would be like, uh-oh. Okay, you got something to look at here. Just lower, 1240, and this is where it gets hairy and the range gets big, but it's important to recognize. 1241, rather, is sort of the end-all because now you're looking at the highs or the swing lows from back here, the close highs from back here in February, and the downslope 50 line. All converge right there. You know where support is. You know where key resistance is. 1264, stretch that even higher. Again, 1267, the monthly open converges on the upper parallel. And that's this region. So you're right. From a trading standpoint, I'm trying to think how I would want to attack this. I'd be looking for either that pullback into 1245, and you're basically trading against 1241. Because if this gives out, you're done. I mean, you'd need to see a asserted break above this region, guys, before I'd have the guts to try to take a long on a breakout here because it could be a quick test of that and a failure. I have no clue if that's going to hold or break. A lot of it's going to have to do with dollar price action as well. But this is big. This is huge. So as far as gold is concerned, these are levels that you cannot get around, okay? And anyone who's talking anything sub 1220 or anyone who's talking anything 1280 or above, these are the levels that you need to get through before you even start to look at any targets beyond that range. It's so critical in nature. I think it's kind of falling under the radar for a lot of traders. So keep those levels in play. On the near term, here's what the slope looks like. Again, The play would be either a breakdown into this region, look for the buy, look for the exhaustion, or on a trigger break to the upside, we have to clear the weekly opening range. I can't get anything excited here on the long side unless we clear, like I said, that 1271 region. Then I think you got legs. Okay, so another one where it's a decision time for sure on gold prices. Now, if we move over, excuse me, if we move over to silver and some of the other commodities, I think those are a little bit more accommodating as far as near-term price action because the plays are a little bit cleaner. Here's what silver looks like. This one surprised me yesterday. I was just looking at the chart and boy, is it clean. I mean, here's the daily, guys, from last year's high. I mean, doesn't happen too often where you get price action quite that clean. You have this major downslope off the highs within the confines of just last year, or the start of this year, excuse me. Just the highs of this year have given you a pretty decent downslope. 50 line catching those lows pretty nice. Here's the 50 line on the upside catching resistance pretty nice. Actually, I think if we stretch this to 618, woof, look at that. It's even cleaner. Point being, it's pretty clean. And it came off of resistance and the monthly open just yesterday. So the near term, the focus was on the pullback. Here's what the intraday chart looks like. And here's what it looked like last night. Okay, so we had just come off this region. And if you guys remember, during the webinar, we were talking about it. I came to this yesterday and I was just looking through it and I was like, where's that circle coming from? And it's that exact median line confluence that we identified here. Uptrend channel resistance, downtrend channel median line resistance, and the really clean cut embedded uptrend here, the 50 line was right there too. There's three median lines converging. We just threw a circle there and look what happened. Boom. Sometimes just trading off of your trend lines, guys, is all you really need. So long story short, the pullback came back into the 50 line here. We saw a dribble below, didn't quite make it into the weekly open, just cents above before turning. But that's still your near-term support. Bullish invalidation is still 1664. Key resistance is still 1733 into 1741. That's still a big region and would complete a really nice extension off the low, two equal legs, and a 50% off the high, let alone it's a level we've been watching as a very clean pivot in price. Again, just a bit higher. I don't know if we get the stretch into this before it turns around, but you got to continue to look higher while above the weekly open for now. Questions on silver? Horace says, so with a gun to your head. You love that line, huh? I'm always going to give you my honest opinion, Horace. I'll tell you that much. If you put a gun to my head right now on silver, I would say look for a drop into this region, maybe into this region, but I do think you see a final test of that 1741 before it turns around. I just don't think you're going to – I don't think commodities have completely turned over yet. I think there needs to be one more kind of surge to screw out a lot of people. But that's just my humble opinion. That being said, you do have the onset of what looks like the beginning of a possible exhaustion trade with the broad divergence. Then you start to see really tighter divergence on another subsequent high. But this is it's median line resistance. You saw a really strong reaction. Keep in mind that at this point, the monthly open, Horace, also comes in right here. Let me just highlight that for you. So you have the monthly open, which converge on the median line for near-term uptrend support, resistance, and the 618 line of that decline. So, let's say this, maybe a spike into this region, then a pullback. But this is what you need to get through to see if we can get that 1741 level. I forgot about that monthly open. He says that's for gold. Oh, you want to talk about gold, or your question was for gold. So on the near term, yeah, I think you're going to get the break, Horace. I do think that you finally see a break and a test of 1244, 1241. That would want some dollar strength, and I got no problem with that. You know, heading into the FOMC, man, the market's going to react and give you an initial reaction. And if there's any kind of hawkish tilt to it, because the market sold off from the FOMC on the last run, you're going to get all these buyers that are going to come in or a short covering, and you're going to see a little bit of a dollar pop. In my humble opinion, I don't know. The devil's in the details with this commentary nonsense. So I'm going to follow price. And as it stands, it looks precarious. It looks precarious for another stab at the lows before it rebounds. But Horace, you're at support right now. You're at support right now. Period. He says, got it. Right on, man. Right on. Okay, that is gold. And silver, it was number 8. Rebounding off support. Let's see if we can get some definitive price action here if we stretch back into the monthly open. Crude prices, number 9. Here's what crude looked like last night, and here's what crude looks like now. You know, again, another trade that is coming into some resistance. I do think it fails here near term. I highlighted this yesterday also on Daily FX, tried to give you guys a heads up on this. Look, we talked about it in the webinar. It's something we talked about last week on the 15th as well. I highlighted that, or the 17th here, the link for that one as well. The June high, the October high close, we talked about it in the webinar yesterday, 51.40, 51.64. That key range of resistance is still at risk. I know we've probed through it, but it doesn't matter. It's all about the closes. You have the median line, the upper parallel, which has been in there as well. This has been a very productive median line, formation. So I'm not going to necessarily trash it. We're above it right now, though. So the emphasis is on what we do today, and I still think you're risking exhaustion. So again, the daily chart, really not much to talk about, right? Bring it into a line chart. You're basically there right now. Just move this out of the way. And the intraday. Looks like it could be a failure to me. Let's see what happens with the US Open. Divergence, weak divergence, so it's not a strong signal. Into the highs. Big level we've been watching. Median line resistance. Is this failure? That's what I'm on the lookout for. If US Open continues to press higher, 9, 10 o'clock, Asia or Europe closes, and we're still northbound to 51.64, it's probably going to see 52.80, which is the next topside target, the April high day close, and that's 52.79. That being said, I'm on the lookout. Here's what the 120 looks like. More divergence in momentum. Got a near-term trigger here. $60-minute. Okay. Note that the weekly open is right here at 50.93. The 618 that we were talking about is at 50.69. Watch 50.93 as support, 50.94. You know, we kind of lost some efficacy during the play here on the dip, but on near-term price, I'd probably be watching that as the initial support for a bounce if you get a pullback. Will the EIA stock changes possibly push price up? Horace, could. It's not something I necessarily take into account in my trading. Obviously, you have OPEC, which is on tap tomorrow. You know, the production cuts that they've been, I don't even want to get into this conversation, Horace, to be quite honest with you. But the production cuts that they've been talking about, the markets have already been pricing in. You have to keep in mind the offset of the increase in production in the U.S., and all this nonsense. I've been reading about it, and I don't want to filter that into my thought process as I'm studying price. So know that the OPEC meeting's on tap tomorrow. As far as trying to interpret what price is going to do I don't think that's going to be beneficial for us. All I know is that price is coming up at resistance here right ahead of the release. So if this thing settles northbound, like I said, at 51.64, I'm not going to fight it. I don't really care what's happening with the OPEC deal. If it breaks sub 49.60, 49.86, that's the support that we noted last night. That's the level that would suggest you have a bigger correction at hand. Okay, and that's here. Keep in mind you have the 200-day moving average. That would necessitate a break back below that 618 line we just defined. The 618 of the advance is 49.91. And I did this last night. I don't want to encourage this kind of behavior because from a technical standpoint, I have no way of knowing that this is a concrete high. But just for argument's sake, if you tack on a basic retracement, the 236 comes right there. So if this is a high, and that's a big if, just a basic simple retracement still takes you into that support zone. So any way you slice it, Horace, you know, looking at the OPEC deal coming forward and the possible event risk that could pose, that's what I'd be looking at. Make sense? Yeah, Sandy, I think that's prudent. I think that's prudent. I'm out of my long position, says Sandy. I think that's a great, if you anywhere between 51.40, 51.64, in my humble opinion, it's a beautiful exit for any long exposure that you're holding. Now that would also be the threshold of support if we settle above it today. And as long as we stay northbound of that, you're looking for a stretch into the April high day close, like I said, 52.80. Questions on crude? Inventory's at 10. Watch prices. That is number 9. Okay, let's jump into some of the Euro crosses, and then I will take your questions. Running low on time here, so let me pick up the pace. Euro Kiwi. Here's what Euro Kiwi looked like from the previous update. Okay. Daily chart. Beautiful reversal off of a major key resistance and Fibonacci level 162.27. We talked about this yesterday. The break below support kept the focus to the downside. We were looking for that move into 59.17. Here's what Euro Kiwi looks like right now. We got it. And the move is now sitting at the 50% retracement, which is 59.04. Major key level that we highlighted yesterday, guys. Remember this sucker? Still in focus, 58.35 into 58.57. Still a big, big region. Now you're seeing a little bit more of a stronger divergent signal here on this low. Near-term resistance is going to be right along those former swing lows, basic trendline resistance. Same setup as yesterday, guys. No change. But we did finally get that tag of the 59.04 level we were looking at. So if you're holding short exposure, you want to clean a little bit up off the table here. Prepare for a possibility of a little bit of a pop, just because I think Kiwi, like I said, you know, if it stretches into that upper parallel, could see some downside, which could kind of fuel a little bit of a rebound here. Note that the monthly open is down there too, 58.85. So any short exposure I have left over would be, how do I say this in a way, not to scare you guys off, protective at this point. I'd have my stops against that high for sure. I don't want to watch my profits evaporate on a breakout here if we do recover all the way back up into that parallel, because that parallel is all the way up at 160.20. It's more than 100 pips from where we are right now. So if you're holding shorts, you know, that's the former swing low, that's the median line, and that's the risk if this thing corrects higher. So just keep that in mind. I would be leaving on a little bit of a position still left. If you're holding shorts, looking to see if you can get that stretch into 58.35, 58.58, big region, okay? But near term, the immediate downside is at risk right above the monthly open. You see the daily chart? But a beautiful setup. I mean, nothing has changed. Again, here's what the intraday chart looks like. And here's what we look like earlier in the week. We're basically right here, a little bit forward in time, puts the focus on that on that little bit of a lower slope, 58.35, which came in. Remember, we measured yesterday. It was an exact 1618 right there. Again, don't go chasing, but immediate downside risk is at, or immediate downside bias is at risk while above 58.87. Okay, the monthly open is sort of, that's the level you want to push through with ease to get that breath of air that you're seeing a larger breakdown. But near term, I'm a little concerned about still favoring short exposure from this point. Karthik says that's scary. Yeah, you see that, Karthik? That's the thing. If you're not in fresh exposure, if you're looking for fresh exposure, let me take a step back. This is not where you want to be looking for on the short side now. If you're holding shorts, just get protective on the stops, I think. No problem. Limit at the monthly open. I'd have another limit at 58.58, and that's it. But if you're looking for fresh exposure, this is not the time to get short. Okay, Euro key, still pretty clean. No change to any of the levels. Watch to see if we get exhaustion on this downside move near term. On the top side pop, again, eventually we'll be looking to get back on the short side of this, but as it stands right now, you could see that move to the upside on a break of this just basic trend line off the highs. Yeah, you're more than welcome, Karthik. Okay, that is number 10. Let us jump into Euro Oz. Number 11, not really much to update on this. Euro Oz is basically still holding a very simple range that we highlighted also earlier in the week. Here is Euro Oz. We talked about the major resistance at 150.46. That's the level to beat. Major key support right at the yearly open from 2016. That gave us basically a range of like 49, basically 49 to 49.14. And we're looking for a break of that range to finally validate a near-term directional bias. I'm thinking exhaustion. We haven't gotten anything of the hallmark of that just yet. 51.05 is the top side of the resistance range. So if we were to get sort of an emotional spike and it fails there, goes back below 50.46, I'm all over it. I'm going to massacre the short side of this if that were to materialize. That would be sort of my dream scenario. I don't know if we'll get that, but that's what I was thinking earlier in the week. Here's what the intraday chart looks like earlier in the week. Same gig. Levels remain unchanged. Here's what the 120 minute looks like, and here's what it looks like now. So that resistance did hold. You saw the pullback. The focus is still on this support into 49. And that's the break that would really suggest, again, you're looking for a larger correction play here to the downside in Euro Oz. Top side 51.05 is that 50% retracement. We didn't quite hit it, but that's still sort of the risk. Heading into deeper into the week here. Doesn't look like Super Mario is giving us much as far as volatility on the Euro crosses right now. So let's see what happens. Again, I think largely will be driven by the Kiwi. And also note that you're seeing weakness in both Euro and Kiwi, so I'm not really surprised to see this thing kind of hold this range. But once that range clears, we should have a really nice play. Either a break below 49 or a final resolution. If it goes northbound at 51, forget it. You're basically talking breakout. This is huge. Okay, near-term upslope support, long-term downslope support. And this is why, we always focus on the daily chart too, guys. So I'm taking up my my median lines here. Right there. It's extending off the highs. So it's loaded into 51. If it goes north of 51, it's done. There's tons of room, which is why it's prudent again to recognize the levels, be ready, and kind of know when the markets are, when they are vulnerable. Let's say when the conditions are right to look for this kind of play. Yeah, Sarub, we went through all the commodities, sir. I went in deep detail for you, so I will have this archived for you as soon as possible. Okay? Okay, any questions here on Euro Oz? That's number 11. Watch for a break of this range. 49 is the key support. 50-50 is resistance, but it's 51 that's the breakout. Okay? Just watch that. That's Euro Oz. Sterling Oz, last but not least, rebound off support yesterday. Another beautiful play. Here's Sterling Oz on the charts. Here's what it looked like earlier in the week. So Sterling Oz was another one that we were looking for the pullback to materialize. The major support that we highlighted on Sunday what was that? Monday was 173.40. Excuse me, 173.16 to 173.86 right here. So you had the 100% extension, 2 equal legs off the high. You had a longer term 100% extension, 2 equal legs off the low, which was a perfect pivot in price. And then you had that slope line that you see, that dotted red line, which was a parallel off the lows from last year and this year. Really clean price action. Super, super clean, basic as you can get. Support, extending off the high, parallel, resistance, turn support, 100 off the high, 100 off the low. It's exactly where this thing bottomed yesterday. Literally, there it is. So where do we go from here? Well, the rebound that we talked about, and literally this was happening during our webinar, the rebound off that level, guess where it found resistance? Right at the weekly open. We had highlighted that too. Near-term bearish invalidation. That held right as a charm, and this thing moved lower. So what do we do from here? And that's the question. I kind of am lost now. The play for me was the rebound. Obviously, the breakdown was the target and the rebound. Now that we kind of closed the weekly open held as resistance and we pulled off, I kind of not sure how I want to play this. You're right middle of the weekly range. So right off the bat, there's nothing to do from here. You don't have anything high or low to trade off against. So I wouldn't touch it from here. But put a gun to my head, I think you possibly make another rally towards 74.60. Look for a short positioning. I do think it settles lower. Both because I think Aussie may still have some catch-up to play to the upside, and Sterling hasn't done a damn thing. This thing is just sitting off resistance, and nothing's happening, right? I want to be long Sterling. I've been wanting to be long Sterling, even for a short-term scalper like me. I can't even find a position to get long on. It's just hugging the highs. Look at the daily chart. I can't get excited about getting long on a trade up here, fresh yearly highs, even from a near-term standpoint. So if we finally get a material pullback in pound, which I've been waiting for days, and Aussie does, play catch up with Kiwi or finds some legs to try to make a move higher, then that would push a nice opportunity, I think, in pound Oz for another low here. So that's kind of what I'm thinking right now. I do think that the risk off of this rebound is still for, like I said, another push here, another rebound, just because the strength of the reaction that we got off it, the fact that it was an exact 100 off the low, and it was, real precise as far as where we pinpointed it. But the broader risk is still this downtrend within the uptrend, which hasn't hit structural support yet. Okay, so like if this, and bear with me, this is going to get messy, but just a drill I like to do, if we were to shift this trend line down to these reference points where we got a little bit more play, or even to this reference point where we got a little bit more of a defined pivot, that's an area or a zone of which now I start to look for resumption of the broader trend. But as long as within the confines of the near term, this is why we do multi-time frame analysis, right? Within the confines of this, we're still looking lower high, lower lows. For me to start calling a low, there needs to be something in near-term price that's shifting my attention to do so. Otherwise, every time we make a new low, I'm going to start thinking that, I've got the low pinpointed, which is a disastrous way to trade. So I hope that offers some perspective here on pound Oz, but you're right middle of the weekly range right now. Let's see how this pans out. Again, I think you have a little bit more of a risk for another washout, but broadly, you got to break the uptrend, the downtrend channel here to get constructive. Questions on pound Aussie. That is number 12 on the session. Okay. Let's see your questions. I just want to touch base on this peso trade. I want to show it to you first here. This is I'll put out a piece on daily effects on this. The low day close is being tested right now as support. Today is going to be important. Here's what it looks like on the daily chart. This is the chart that we've been following on SB. Obviously, the break. The last time we reviewed this, I think, was early on the month as we were testing the underbelly of the lower median line parallel as resistance. Look how perfect that worked. Both attempts held as resistance, even on a third attempt, the overshoot. Really strong reaction off it. Back below the monthly open, we're testing the yearly low day close. Today's close will be important, guys. If we close below that, it keeps the downside focus in play. Momentum also has a pending daily trigger. If that settles, remember, this means nothing until the candle closes. So if this were, again, to close below that trend line to give us a trigger break, in my mind, I'd be looking for a little bit more of a resumption down into the median line here. Major support doesn't come in until the 38.2 retracement, and that's going to also coincide with the November lows right around 18.0045, 18.158, or 15.86, this region here. So clear-cut targets, you know what to do, but I'm watching for today's close. There's nothing to do on a trading basis just yet. But if we do close below that, that's sort of the risk. On an intraday basis, even that, I just wanted to highlight the weekly opening range, but it looks like we're trying to make a break of it right now. Right? See how we look into the US Open, but it's testing the weekly opening range as we speak. So a trade, I think, maybe on the menu over the next day or so, but keep your eye on that major key support and the low day close here. Aussie Kiwi for Puja. I haven't looked at it recently, but I'm assuming it looks super interesting on a move lower. Yeah. Okay. Dun, dun, dun. Again, back to the slope of influence. Puja, remember this bad boy? Woof. Oh, goodness. So, guys, this is a basic slope. I don't have too much time, but this is a basic slope extending off the lows from 2014. We've talked about this slope for years, literally years, and it's offered so many major key pivots in price, both on the declines and the ascents. That same slope extending off the lows from 2015, which caught the exact 2015 gradient, was kind of messy last year, but it's literally catching the lows here. I don't know if this is going to be something that's concrete, Puja, but I'm certainly going to pay attention. I'm certainly going to pay attention. We've had way too many pivots off this gradient for me to just kind of be oblivious to it. This is our bread and butter. This is what we do. So we're there right now. You just got me excited about this. No, I don't know. It could sail right through, but again, you could see it for yourself, guys. Don't take my word for anything. It's something the market has obviously paid attention to. Even here on the high early in the month, I didn't even notice that hit that same slope too. Okay. Give me a sec. What is this? What happened at the 618? Did we sail right through? Yeah. Yeah, so I'm mindful of any short exposure from here. The 50, I don't want to stress that, nor the 38.2 at this point. Okay, your next big zone of support is down here. So if this does materialize to be a break, Puja, just for your information, your next downside move would definitely be 106 into one, let's call it 105.80, 105.90, this region here. Huge. 200-day moving average, slope support, 618 retracement. Okay, so you know where to look if it breaks from here. Let's go into the intraday. Okay, looks like I already gauged that 100. 50, let's get rid of that again. Oof, look how nice and clean. Support, 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 break, instant resistance, pivot, a little messy there. Support, perfect, break, instant resistance. We'll stay bearish below that region. That's again 60. So below the yearly open is initial resistance. No, I'd still want to keep it a little bit higher. 106.75 or so. Keep it on that gradient. I'd stay bearish below that. As far as next downside target, look for the swing low here, 106.10, but it's really 106, 105.90. That's the next big region. Obviously, this doesn't take into account, Pooja, what I just told you about the long-term trend line here. I don't know if the slope will transfer. Yeah, you can leave it like that. Does that make sense? If you're holding short exposure, I'd be taking some off, okay, with a stop against that gradient. Next downside limit, 106. What would make you look for a long trigger? 4-hour momentum is oversold now. So you're getting divergence here. What would make me look for a long trigger? I'd need to see a rebound, a pullback and test and failure ahead of that low. It's the only way I'll play a rebound, unless it's an emotional play. And when I say emotional, guys, I'm talking about like a data spike. Like the market comes out, the data fuels a huge rally into a resistance range. Lots of times, those are your best sort of near-term instant reactionary fades. But to play just a reversal off support or reversal off resistance, Pooja, I always need to see the rebound, check and retest, then go. A lot of times you miss it, but that's the only way to play it responsibly without trying to call a high on every stretch. So that's what I would be looking for. I can tell you again, based on that long-term chart, I'm looking for a bounce here. This is, you know, that slope has just been ridiculous for us, you know, over the years. So if it's going to find some support, this is where you would start to look for it initially. Okay? I'm running low on time, so sterling yen for Sandy, real quick. Here's what sterling yen looked like. I'm not going to lie to you. Again, I haven't looked at this trade in some time. So let me just take a quick peek for you. Here's your monthly open. And you're basically testing the monthly opening ranges on this move. Yeah, I can tell you just the major key levels that I'm still liking. Obviously, that swing low at 145.39 has still been huge over the last 2 weeks. That's still been major resistance. And then the monthly open has just continued to offer support. Specifically, it's the opening range low for the week too. I mean, for me, that's the only play here in pound yen. It's sort of the same play for me, Sandy, on pound. Pound heard of you, Mike. It's moving now, she's saying. Oh, yeah? Are we making a move here finally? Oh, sweet. All right. Come on. Let's get some hightailing here. This is good. So we're getting the final break here of the monthly open, which is something that has held a support since the start of the week. We saw 2 tags of it already. Looks like we're making a downside play. Look for a slope at 129.20, just lower, but I hope we get the deeper correction. And we're going to continue to favor sort of a more pullback here so we can try to get a long position on pound. I'm looking for support at one of these median lines initially. I wouldn't want to do anything off this one, even if it holds right now. It's just too close for comfort, but certainly on a move back into that 128.50 level is sort of 128.27, my favorite zone. And once we get structure to the decline, not much to do yet. Okay, way too premature, but you get the picture of what I'm trying to do. Once we get structure to the decline, it might end up just being, it might end up just being, a basic slope that we're working with. Whoops. We'll have to see. That converges right at that same level. We'll have to see how this starts to pan out. All right, guys. I am way over on time. Karthik says, most of the time I feel like support and resistance are nothing but luck and bad luck. Karthik, that's a concerning comment. That's our bread and butter, my friend. You have to have faith in the analysis and conviction in the analysis you're doing. Otherwise, you're just chasing levels, my man. So, it's something that takes time and years to cultivate and feel really comfortable with and have the confidence in, but you're in the right place. And let me tell you, a lot of times when you start to lose faith in that, you look at some trades that you've entered and you look back on the analysis and your conviction is right there in front of your eyes. So keep the faith, my good man, and you're in the right place. I will see you guys all tomorrow morning, bright and early, 8:30 for the final webinar of the week. Another Intraday Strategy webinar. Keep in mind also that today's webinar with Jamie is on tap at 11 o'clock. That will be shortly after the conclusion of this webinar. And again, he'll have the midweek strategy webinar on tap for you guys. I'll see you all tomorrow morning. Best of luck trading. 10 o'clock, watch for the BOC and the release of those oil inventories. Cheers.